Rick Santelli standing by. Got some important numbers. Is at the CME in Chicago. Rick, they should be hitting any second, right now, in fact.
Yes, they're hitting the wires as we speak. These are, of course, personal income and spending for the month of April. We're also getting inventories, which are hitting the wire first. Wholesale inventories unchanged. We're expecting up 0.4. Retail inventories come in as expected, down 0.1%. And personal income is up 0.8, up 0.8%. That is almost triple the expectations, and it underscores, we could talk about a lot of issues, but when you look at income for the first 4 months of the year, they're powerful numbers, Joe. Up 0.6 in January, up 0.7 in February, up 0.5% last month, up 0.8 this month. This is a great 4-month start to any year. Now, with the income shooting up, and by the way, 0.8 is the strongest income month-over-month jump since May of 21, when it was 1.9. If we look at spending, comes in exactly as expected, up 0.2. This follows an up 0.7 number, which was the best since December of last year. Now let's look at real spending adjusted for inflation. Comes in a little better at 0.1, but well below last month's up 0.7, which was the best since January of 23. If we look at the inflation numbers, and here we go, on a month-over-month basis for PCE up 0.1 as expected. On a year-over-year PCE up 2.1. That's 0.1 lighter than we were expecting. 2.1 equals SEPA 24. To find a lower one, you're back to February of 21. Now let's look at the core numbers on a month-over-month basis, up 0.1, exactly as expected. And if we look at a year-over-year perspective, 2.5 exactly as expected. A tenth lower than 2.6 last month, which then was revised to 2.7, which makes us down 0.2%. 2.5, well, the last time we were here, if I have to go back, wow, it's been a while since 2.5. I would say that you're going back to the spring of 21. Now, we talked about inventories. The last number is, of course, a very important number to this administration. This is the trade balance, which is a deficit, expecting minus $143 billion. Wow, it comes in much smaller, minus $87 billion. And now this follows a 163 that gets converted to 162 billion with a minus sign, the worst since record-keeping 1989. Then we cut it in half to 87.6. 87.6 would be the lightest, and I have to really go back. 87.6 would be the lightest since... wow, September of 23, SEP of 23. And this really does underscore how the movement of goods and services has really changed due to a variety of tariff-related issues. Now, after all of that, where are the markets? Well, up a little bit. We were at 441. We're now at 443 and a 10. By the way, it settled last week at 451. A 2-year is at 393. It was at 392 before the number, down 7 on the week. And I will just point out one more thing. Both maturities before the number were on pace for the lowest yield closes in 3 weeks, but we see that rates have moved up just a smidge. Joe, back to you.